Good morning, everyone, and happy Friday. It is a weekly expiration. It is January 22nd, and we here at Harvested Financial are looking at the markets. But before I get into that, I have to give my brief disclosures, and I will be sure to remind everyone that all the information, commentary, and opinions expressed on this or other websites or on any other social media platforms or in any media format reflects the personal opinions, viewpoints, and interpretations of the employees providing such comments and are not to be considered a description or an offer of advisory services by Harvested Financial. The opinions are expressed for general informational purposes only and are not intended to provide specific advice or recommendations for any individual on any specific security or investment product. It is only intended to provide education about the financial industry, and in no way is any content on this website meant to convey investment advice, performance data, or any specific recommendations to buy or sell. Harvested Financial employs multiple methods of analysis and security selection to create client portfolios, which are not discussed in their entirety here. All investments carry the risk of loss, and users should discuss any decisions with their financial advisor, and past performance is not a guarantee of future results. So what do we have here? It is Friday. Like I said, it is expiration Friday. It's a weekly expiration. We had that big expiration last week roll off. So definitely a little bit more action in the markets this week. We saw some early buoyancy in the week, but some of that is coming off. So I'm going to look at our benchmarks, and I see SPY down $1.82. That's about 50 bips. I see the Qs off 93 cents. That's only 30 bips for them. I see IWM down $1.60. That's 77 bips. So while we're not off quite as much as the futures indicated earlier this morning, we're giving back a little bit of our gains, but overall been a buoyant week in the market. And one name that we have our eye on right now, based on its past month of buoyancy, is the SPCE ticker. So that is Virgin Galactic. And I'm gonna go ahead and share my screen with y'all because I wanna talk about what we can do in a name like this and how to play this big rise that's happened in Virgin Galactic. So like I mentioned, over the last month, it's up over 30%. We're sitting close to some of the highs here, and we might wanna wonder, how can we protect this? That's obviously been a common theme that we've been talking about a lot here, partly because of market valuations, but partly because that's also a fantastic way to use options and option strategies, is as collars, protection, overwrites, overlays on your existing equity strategies. So sitting on big gains, again, a wonderful place to use option strategies. So what I kind of have queued up for everyone here is looking at the February expiration. So I'm looking at Feb, which is about 28 days out. Not only is it 28 days long, it's 28 days from today, but that Feb 19th expiration is trading at around 100 vol. So really volatile name, obviously, demonstrated by its price action, or I should say the implied volatility reflects the price action that we've seen here. So how do we protect that? You've been a long holder, you've been bullish on this everything since it's SPAC'd into existence. Well, let's think about buying maybe the 130 or the 30 puts, I should say. And we're going to pay about $2 for those 30 puts. Those 30 puts are around $3 away. Stock's trading around 33 right now. So this is protecting you beyond a 10% drop. And what are we going to give up for that? Well, I'm going to go back to my favorite, or one of my favorites, the slingshot, because I think, pun intended, this is a name that could blast off. So while you do want the protection, this is another really good place to use the slingshot trade, because you're going to get that downside protection, and you're going to get it and finance it by selling a little bit of upside, but still staying exposed to that real slingshot upside. So we start the whole slingshot trade by picking the put that we want to buy. So we're going to buy this 30 put, pay around $2. And I'm going to use that $2 as a way to find the call spread that I want to sell against this. So I usually like selling the at the money call spreads. And so I'm going to sell the 33 half. Stock's trading around 33.40 right now, collecting around 380. So what do I need to think about? I need to think, where can I collect 380? I need to pay out to, where can I buy a 180 call to make this an almost even trade? So it doesn't come out exactly. This midpoint of this trade is about 15 cents. But if I buy the 30 put and then sell the 33 half 40 call spread, I have almost an even kind of zero cost slingshot. So I give up the first $6.50 of upside. So, that is quite a chunk of upside, right? Like you are giving up the next $6.50 of potential runway, but you're getting that downside protection should this drop below 30. However, if we see stock jump by, it's going to be about a 20% jump or more, you're going to participate dollar for dollar in that. Another interesting flavor of the slingshot is instead of just looking at this February 28th, I can think about, okay, well, I need to collect $2 over the course of the next 28 days, over the next 4 expirations. So I have January 29th, I have February 5th, and I have February 12th that I can all trade again against this. So I should say we have 4 weeks, but we have 4 weeks and those 4 expirations that we can each trade on each successive week that goes out. So if I pay $2, that means I only need to collect 50 cents over each of the course of the next 4 expirations. So an alternative would be use that $2 and instead go to the Jan 29th. Where can I collect 50 cents? Well, I can sell a much higher call spread. In fact, if I sell the 36 at 110 and buy back the 39 at 60 cents, that's about that 50 cents. So remember, I need to get 50 cents 4 times to make $2. So I have this $3 vertical that I've collected about 50 cents on, and I still have the room between 33.5 and 36 over the course of the next week. So you can sell that higher call spread if you do this on a more frequent basis, if you roll this consistently over time. So there's so much about systematics with option strategy, and that's what Harvested Financial excels in, is executing these types of trades over time to help manage your equity position. Lock in your gains for 0 cost. So we here at Harvested Financial are here every single day on the Daily Bread, 8:35 Central, 9:35 Eastern. You can also check us out on our Twitter at harvested_DAFE, because derivatives are for everyone. And tune in, hit subscribe on our YouTube channel, and sign up for our emailing list. We send out a newsletter every Friday, as well as these Daily Breads on a daily basis. So I hope everyone's going into a fun Expiration Friday, and we look forward to seeing you again on Monday. Happy trading and enjoy the day.